Well, it's 3 o'clock, so we'll get started. Thank you all for joining us today. For those of you who don't know me, my name is Hamish Mixted and I'm a director at Convex Accounting.
Hi all, I'm Rhianne. I'm a director at Convex Accounting and yeah, happy to help.
So what we want to run through today is a lot of the frequently asked questions that we're getting faced with by our customers all over the time, because these are really challenging times, and the more we can kind of share information and help you guys understand what other business owners are doing to respond to the pretty unique situation that we're facing, the better. So we're going to run through a series of questions we've been sent through already by people. But if you look at the bottom window on your chat panel, you'll see that there is a Q&A box and there's also a chat box. For questions and answers, if you put your questions in there, they're private, no one else can see them, so don't feel like you're asking a stupid question. Although bear in mind, there is no stupid questions at all, because we've probably heard crazier than whatever is going through your head. So look, if there's anything you're unsure about whether you should ask it or not, definitely do, simply because now's the time when we've all got the chance to run through things. Bear with us as well, we're sort of making this up as we go, and I'm trying to deal with questions, get the technology working and keep everything ticking over, so forgive us for any stumblings or for any children that walk in the back door behind me. Mine are hopefully playing quietly in their bedroom, but no guarantees that that will last for too long, and it's probably the same for you guys. Hey, Rhianne.
Yep, hold on.
So I thought to begin with, what we can start running through is sort of how Convex, how we've as a firm responded to what's unfolded, because I think if there's some lessons for you guys in terms of what we've done, then by all means take them away. And the thing I've been talking to a lot of business owners about more than anything is simply delaying decisions. And that's not to say avoid making the hard decisions, but if we can drag out the period of time over which we're deciding to pay people their full wage versus making people redundant, then we've got more data and we're more able to make a more informed decision. And look, things are changing all the time. So if we roll back a week, lockdown wasn't a thing. And at that point, as a business, we were thinking about getting everyone working from home and getting everyone prepared to do it for up to 3 months. And 3 months is a long period of time, but it simply meant that everyone would have their heads in the right frame of mind to be able to work from home. Now, fast forward now, we end up with a position where we know that it's going to be for 4 weeks. It could be for longer, but let's use the data we've got today, which is 4 weeks, and come up with a really solid plan for the cash flow and the profitability of our business over that time. And knowing that it's a 4-week window has meant that we haven't had to lay people off or cut hours or cut back pay at all, because we know that we've got the financial strength to be able to get through it. Now, it's not to say that it's going to be the same for every business, but at the end of the day, if you have an understanding of what your business looks like for the next 4 weeks, then you can plan for it from there. The other side of it, I guess, is what happens after the 4 weeks. And for a lot of businesses, in fact, for every business, it's the period after this 4 weeks of lockdown that I'm really concerned about, because it's going to take a while for us to get back to business as usual. And some businesses will get back quicker than others. So if you're in hospitality, for example, I think you'll be back to normal sooner if you're a takeaway bar compared to a nightclub. And my pick around that is that the health authorities will be more concerned about a nightclub and transmission of COVID compared to a takeaway food shop. So I think they'll take a very business by business approach to decide who gets to reopen. And at the same time, when we're coming up with a plan for our business, we've got to be able to think through what that business by business approach looks like when it comes to what we do with our staff, how we manage our cash flow, what tax we pay, whether we take the bank loans, and so on and so forth. What is your thinking on that, Rhianne?
Yeah, even with the people that I've had discussions with today, there was one in hospitality who she was happy that there's a bit of guidance now, or there's some decisions being made. So like Hamish was saying, make your decisions as the information comes to light and try and hold off as much as you can. Like, she's happy that, okay, I know what's going to happen for these next 4 weeks, and then I can plan around that. And then I can look at scenarios for after 4 weeks. Okay, if they choose to shut us down for another 4 weeks, what does that look like for me and my cash flow? So it's, yeah, along the same lines, I think for most businesses, as long as they can have a little bit of the data there to make that next step, as well as planning at the same time, but without making big decisions, too rashly or without any guidance. So yeah, so kind of along those same lines, just wait it out, make decisions based on the information that comes out as we go.
Now, look, none of this is to say avoid making a hard decision. So if the decision in your business is that you need to let people go or you need to cut back hours, then by all means make that decision, but just make it in a really deliberate fashion. Let's try and take the emotion out of this as best we can, because it's an emotional time for people. And a lot of the business owners I've talked to have been really upset about letting people go and really kind of struggling to come to terms with that decision. But if you do need to make the call, make the call, but let's try and make it in as unemotional sort of fashion as we possibly can. And fundamentally, it just comes down to data. So the first action point that I'm saying for every business is to get your Xero reconciled, to understand how much money you owe people, to understand how much money people owe you, and then you've got a cash position that you can work from. With that cash position, you can then say, well, what does it look like if I have no sales for the next 4 weeks and then the next 4 weeks after that? So you look at an 8-week horizon rather than a 4-week, and you say, well, with the cash I've got on got my hands on today, I can get through an 8-week period. I can't get past that. So then we start to have a conversation around the cash runway and how far businesses can keep on trucking before they simply run out of cash. So just a reminder to use the question and answer panel down the bottom for any questions you've got so far. We've had a few come through already, which is awesome, and we're definitely going to get through all of them. The first one, though, I guess, is what's changed since we went to level 4. So if you jump on our website, convexaccounting.co.nz/COVID, we've got a specific page where we shot a video. It might have been, the weeks that seem to go so quick around. Was it Friday last week?
Yeah.
So we shot that Friday last week before the lockdown, before the 4 levels and anything like that. And it feels like an eternity ago right now. But some of the things on that are completely out of date because of how quickly everything's going. And I guess if we just quickly touch on what's changed in the last week, we had the subsidy come in. So the wage subsidy, where if you've got a 30% reduction in turnover, you get a contribution towards your wages cost. We've had that cap lifted. So it was originally capped at 150 grand for any one business. The cap is now unlimited. So you can claim for every single employee, no matter how many employees you've got. Then yesterday, I think it was, the government came out with the additional support they're giving banks to support business in turn and to support people with their mortgage payments at home. Ultimately, what we've got here is more data. So we can now use the data that the banks can support us as a business to put together a really compelling case for banks to give us money. Whereas beforehand, we were sort of hoping that they'd give us money, whereas now we've got the data to know that they will be supporting us. We've got the data to know that the minimum wage is still going to be going up on the 1st of April. Now, like that decision or not, we've got the decision. So we just need to plow on with that in our planning on the basis that it's going to continue. So let's take every single piece of data we can get, turn it into a plan, both cash flow and profitability for our business, to understand what the balance sheet's going to look like, and then make decisions in a really sort of controlled way. And then we're going to get through. Then we can sleep at night as business owners, and then we can keep on boxing. So the next question we've got here is, am I eligible for the subsidy? Do you want to grab that one, Rhian?
Yeah, sure. So they've been quite clear around that 30% drop, and that can relate to, so it can be a 30% drop between January and June. So part of it, so we've gone January, February, March. If you're comparing that to your January, February, March of last year, if any of those 3 months show that at least a 30% decline in turnover relating to the COVID crisis, then you definitely should jump in and apply for that. But the other side is, if you think you're going to see a 30% decline in April, May or June, then you should also jump in and apply for that subsidy. And that's probably where it's going to affect a lot more businesses, especially with this pretty much the whole of April being shut down. And then May, June, there's going to be flow-on effects. So it's about, yeah, having a look at that plan for yourself. So what you hopefully everyone will start developing plans for what's going to happen over these next few months, even though a lot of it's still unclear. We have a bit of the data to make these decisions. So really that 30% line is quite clear in there. It won't help some businesses who have bigger drops of income at different periods. So it's not as the months don't relate clearly. Like you won't be able to compare them as much to January, February, March from last year, or people like in real estate agents, graphic design agencies, some that can keep working during this lockdown period. It really depends on what business you're in. But yeah, especially during this lockdown period, if you're unable to work, it's pretty clear that you'll be able to apply for that one.
And it's those businesses who have income which has a big lag on it that I'm really worried about. So if you're a graphic design agency, for example, you can send your guys home, have them working on projects from home and keep being able to bill, but you're not prospecting, you're not finding sales leads at the moment. So once the lockdown is lifted, you've got rid of all the work you had on your books before the lockdown, but you're not out actively finding new customers today and tomorrow. So that's going to create a hole in your cash flow probably in August, September, October. And at the moment, that's not covered by the wage subsidy. So your quiet period would be after June. So therefore no subsidy for you and your business. So for those guys, it's going to be really challenging. It'll be interesting to see kind of how the government responds to it. But yeah, watch for space. The next question I've got here is, what do best efforts mean? I think what this is referring to is, if we apply for the wage subsidy, we are, as business owners, undertaking to keep our employees at an 80% wage. So we can cut their hours back 20%, but we can't cut them back further than that and still meet our obligations under the wage subsidy. Now, there's sort of two elements to this question, I guess. One is from the employment law perspective, and I don't want to touch on employment law at all because I'm a humble accountant as opposed to expert employment lawyer. But we can't go around cutting people's hours back willy-nilly without their permission and without their agreement to it. At the same time, some businesses can't afford to pay their employees 80% of their normal wage, given that they've got no income coming in. So we're walking a real tightrope here. So from the subsidies perspective, we have to use our best efforts to keep people at 80%. Now, what best efforts mean is a bit wishy-washy, it's a bit vague, and that's simply because the government has brought this out in a really proactive and quick fashion, so we don't have full documentation around it. Fundamentally though, what I want to be seeing from businesses who are going to cut people back lower than that 80%, and remember, you'd be cutting back lower than 80% with the employee's permission, is more often than not, we're doing scenario planning. So we'd run one scenario where we show the business's cash flow if we paid the employee at 100% wages, if we paid them at 80% wages, and for others, if we paid them as low as $585.80 a week. And remembering that $585 is the government contribution for each employee. So under each of those scenarios, you might show that at 100% you lose 200 grand. At 80% you lose 150, and at 585 you lose 50K. So with that knowledge, you can go to your employees in a really, I guess, transparent fashion, and being as honest and open as possible as you can be with them to show the position under every scenario. You then have a conversation with them around what the future viability of the business is if you pay them 100%, 80%, or 585. And with that in mind, then get their agreement to take a lesser amount than 100%. Because remembering that they are entitled to their regular pay, even though they can't work, they do have the regular protections that they've got under their employment contracts. So we can't simply go out there and cut just because they can't go to work. We've got to be really responsible as employers and be really transparent, I guess, with how we approach this with them.
Yeah, I think it comes back to the communication around it. Be really clear, and as much as you can paint the picture or show them that, the numbers that you've mapped out for the business. Hopefully that, you can come to an understanding with your employees that it's the best for everyone if you can keep the business alive by cutting back a little bit. It's a bonus for them because they'll have jobs to come back to once this clears up. you know, the other side is, hey, okay, we're going to keep paying you this much, but we're going to die as a business and we won't be alive in 4 weeks. So it's about just communicating with them and showing what's really happening, that, you know, you're not just trying to, I don't know, protect yourself. You want to keep these people employed, but if you can't find that common ground, then it's just going to be a mess for everybody and nobody wins. And that's kind of what the government's idea is, you know, hopefully give businesses a bit of cash so they can keep people employed for when this turns around. And hopefully got your people there waiting with you.
I got a little grumpy at a customer earlier today because they were basically demanding that their employees be really loyal to them in the future because they were dipping into their own pocket. And I sort of felt that the employer was taking the wrong approach with it. Like, yes, your employees should be loyal to you because you're keeping them in work, but the employer also needs to be loyal to the employee, and that the employee in this case was accepting a significant pay cut. So we've got to remember that we as employers are dipping into our pockets, but employees are as well when they agree to. So I think we've all got to sort of play nicely together, as opposed to taking an us and them sort of approach, or kind of throwing our weight around too much. So the next question here is, I'm confused about the subsidies. What are they? And look, that's a really fair question, because they are really similar and the terminology gets confused. So basically, when the schemes were brought out, there were two different subsidies. One was for people who were required to self-isolate. So these are people who returned from overseas, or were caring with a person who was infected, or were caring for someone who had returned from overseas. Now, for most people now, that subsidy is off the table. So lockdown, which is what we're in now, is different from self-isolation. So that's really important to bear in mind. So for 9 out of 10 people, the self-isolation subsidy is gone. The subsidy we've got now is where, as we were saying earlier, we've got a 30% reduction in turnover, and you keep people employed on up to 80% of their regular hours where possible. So the subsidy is for wages. It's not for you to pay rent or for you to pay your business lending off with. It is specifically for wages, and that's important to remember. So there's a 30% criteria, or a 30% reduction in your turnover that you've got to have. And if you've had that reduction, then you can apply for the government support to help you pay your wages.
Yeah.
The next one here is, how long is it taking for the application to be processed? How quickly are your ones getting through, Rhian?
It's still been a mixed bag. There's some that are happening within a day or two, and there's others that are still waiting from last week. I'm finding it slower for some contractors or traders. But yeah, so it has been quite mixed. Some people are getting quite lucky and it's coming through, but there's not much communication on it as well. Once you submit it, you kind of just have to wait and, until I think they send a text out.
Yeah, cool. So hey, just remember as well, we've got a heap of questions coming through and we're getting to them as quickly as possible. Use the Q&A section down the bottom. I'm going to try and deal with the ones on the subsidies first, and then jump into the tax changes that have come out and how we deal with the upcoming provisional tax payments. The next one is, I'm on drawings, can I take the subsidy? And so what this, I guess, is getting at is a shareholder in a business works in the business but isn't on PAYE. They're just taking cash kind of as they like through the business. Now, yes, you can claim the subsidy. It's open to all shareholders of businesses where they're actively working in the business. You don't have to be on payroll. The next one is, I've got some contractors and some employees. What do I do with the subsidy?
Yeah, so with that one, if they're your employees, you claim it for them. If they're contractors, don't include that in your application. They need to apply separately if, you know, within their contracting business their income has dropped, and it most likely will if they can't do work for you or any other people that they contract to. So even if you can advise them that they can apply under themselves, but yeah, don't include them in your application.
Cool. So the next one here is, can you tell me about some of the tax changes? So there's been a swag of tax changes that came out, and these came out at the time of the initial subsidy discussions. So the main tax changes are that the threshold for low value assets has been increased for the 2021 financial year. So this is the financial year that starts on Wednesday next week or whenever it is. So previously, if you bought an asset worth more than $500, you had to treat it as an asset. So for the 2021 financial year, that threshold is lifted to $5,000. So if it's worth more than $5,000, you have to treat it as an asset. After the 2021 financial year, it will be reduced back to $1,000. So there's a window where, as businesses, we can go out and buy new equipment and treat it as an expense, when previously we'd be treating it as an asset. Now, the government have brought that into place to encourage business spending. Now, whether businesses will be able to spend after this or not is, I guess, a moot point. But at the end of the day, the encouragement and the tax benefit is there. There's some minor ones around the increase in provisional tax thresholds, which, to be honest, won't support too many businesses. And the other real one is around depreciation on buildings. So with that one, basically the government probably 8 or 9 years ago repealed the depreciation on commercial properties. The government has reintroduced that with effect from 1 April this year. So that's going to be a tax advantage for commercial landlords and commercial property owners from 1 April this year. So keep an eye out for that one. That is a permanent change and will apply from 1 April onwards. The other one is around use of money interest. So basically the IRD has been given the ability to write off interest on late payments of tax. Now, they've indicated that they will apply that for the provisional tax payment on the 7th of May, not for the terminal tax payment on the 7th of April. So if we talk about the terminal tax payment, first of all, so this payment is due on the 7th of April and relates to the March 2019 financial year. So it's the wash up of your actual tax minus your provisional tax to give you the balance that's left over. Now, the IRD's position at the moment is that because the income arose in a period where COVID wasn't a thing, you should have the cash put to one side. You should have the money sitting there ready to pay them, so pay them as usual. Now, in my view, I don't want to sit here and apologize for the IRD at all. In my view, that's a little short-sighted because it sort of doesn't take into account the nature of business and the fact that we've all got cash flow which goes up and down. But at the moment, that's the hand we've got. So with the payment on the 7th of April, we're recommending to our customers that if you've got the cash available, we pay it in full. If you don't have the cash available, or you're looking at it thinking everything is quite borderline here, we would be recommending that you put it onto an installment arrangement with the IRD. That will make sure that there's no penalties imposed, but in all likelihood, the IRD are going to have an interest charge that they sting you with. And at the end of the day, we either borrow the money from the IRD or borrow it from the bank. So we're sort of in no worse position, albeit at a different interest rate. We just don't have as much flexibility on that at all. Then we've got the 7th of May payment. Now, this is the third and final installment of provisional tax for the 2020 financial year. And we've got complete flexibility on it. So with these payments, we're recommending at this stage that customers do not make them to the IRD. And that's on the basis that we're not quite sure how long this thing's going to drag out. We don't know what business is going to look like. And off the back of that, we want to be holding on to our money. Now, if we don't pay the IRD though, we're exposed to penalties and interest. So the way to mitigate that is to take the money that you normally would have paid to the IRD and pay it into what's called tax pooling. Basically, your money sits with the public trust, and because it's with the public trust, it's deemed to be with the IRD. If it turns out that you need to get your money back, you can get your money back with one phone call. Now, if you've ever tried to get your money out of the IRD, you'll know that it's not always that easy. So the benefit of paying it into the public trust is that we cancel out any penalties, we cancel out any interest, but we can get our hands on our cash if we need it. I guess the other scenario though is we've got a tax payment to make on 7 May and we simply don't have the cash. In that situation, we would recommend talking to the IRD, but obviously don't do that off your own bat. Talk to your accountant or us if we're your accountant, and then we can sort of guide you through that process.
Yeah, because I think that the part that is a little bit unknown, so it is at IRD's discretion. So whether they're going to go all in and make people prove that COVID has had an effect and made it hard for you to get that tax payment together is the question. And we're hoping they're going to be quite lenient, because this is a really crazy time for everybody. But it is, it will come down to that conversation that yourselves or we have with IRD on your behalf, and how we paint that picture. So it looks straightforward, but then when you read the wording, it does come down to how you explain what's happened in your business and how COVID has affected it.
I think the other side of this as well is that the IRD also have a set of financial hardship rules, and these hardship rules existed before COVID became a thing. And under those, if you can show that you genuinely cannot afford to pay the tax bill, then they have the ability to write off tax in some situations. So there's a bit of discussion on Facebook groups and things like that by business owners thinking they're simply going to get their tax written off. And I think at this point in time, that approach is a little naive, simply because that really does come down to IRD discretion. So to rely on the IRD saying yes, I think would be a bit hopeful at this point. I've got one here which is moving on from tax. I think we've got all of those ones there. What's the deal with mortgage relief? So with mortgage relief, the government came out yesterday and said that they would underwrite and support banks to help both businesses and property owners with mortgage relief and business lending. So what the banks on the mortgage side said is that they would give a 6-month principal and interest repayment holiday, which everyone got pretty excited about on the basis that they wouldn't be paying their mortgage for 6 months. Now, for me, there is no way on earth that I'm recommending our customers don't pay their mortgage for 6 months, because it's certainly not a holiday. What the bank is doing is basically tacking this 6-month period on now to the back end of your mortgage. So instead of it being a 30-year mortgage, it becomes a 32-year mortgage, because the 6 months of holiday will build up more and more and more interest over time. So it's going to take people a lot of time to recover. So where possible, we're recommending that people avoid taking this. Now, obviously there's situations where you need to, but if we're coming to that as a last resort, then we're all going to be in a better place. And then at the same time, they announced that the government would be supporting banks to access business lending. So what they've said is that the government will underwrite 80% of a loan that any bank makes to a business up to $500,000, as long as that business is turning over 250K per annum up to a maximum of $8 million. Now, these loans are repayable within 3 years, so there's quite a short time frame on them. So if you're taking a $500,000 loan, you've got to find $500,000 to pay back the bank within 3 years. So that can be challenging depending on the size and scale of your business. The interest rates on them are meant to be appropriate given that the bank is underwriting the loan. So I don't know about you, Rhian, but I haven't seen any loans come through yet with headline interest rates on them.
Yeah, no, I haven't had any yet.
So yeah, I'd expect it to be more than an interest rate on your mortgage, but less than an overdraft interest rate. So if it was sitting around 6 or 7%, then I probably wouldn't be surprised. The thing with this though, right, is the bank needs to assess your ability as a business to be able to repay the loan. So I'd be looking at it as a banker saying, all things taken into account, will this business be around in 3 years to pay back the loan? And to be able to get a yes on that question from a bank, you're going to have to show really clear forecasts and projections with different scenarios to demonstrate that you've got the business strength, but also the financial understanding and the financial awareness to understand what you're getting into. So it's not something that we're recommending businesses jump out and grab today or tomorrow. It's something you should think about and consult with your accountant on, but not something to rush at. I have a client who's renting her premises and then subletting to her contractors who use the room. The subcontractors are asking for a rent reduction and her landlord isn't giving one. Difficult situation, I guess, because the tenant of the property is basically being squeezed by her sub-tenants, I guess. If I was the tenant, I would only be passing on any reduction I got from my landlord, because otherwise effectively they're getting squeezed in the middle and acting as the bank to everyone.
Yeah, so they'd be wanting to keep those contractors happy as well, because once again, it's thinking about when business bounces back. Hopefully it does. She or he will be wanting them to stay, you know, to stay subleasing that the rooms in the tenancy agreement. So it is a tough one, whether you lose them, lose those subtenants, and in the long run have to look for somebody new. It just depends on how easy that would be in the future for them to get more people in there. But yeah, like we're all trying to do, we're trying to play nice and make it work for everybody. But if hard calls have to be made, once again, those calls based on the numbers or the data that you've got at the time.
There's another one here. Are there any subsidies for overhead costs? Oh, we're back onto subsidies again. Are there any subsidies for overhead costs such as rent? Which I guess is tied into this question. And the answer to that is no. But I would expect I understand that there's packages coming from local councils shortly in respect of rates relief. So that might help some landlords pass on rent holidays to tenants. So yeah, I would expect to see something from at least the Wellington City Council in the next few days around it, and the same for, I guess, some of the other more regional councils around the place. How do I deal with the subsidy payment in Xero? So there's a couple of schools of thought on this, but the long and the short of it is that there's no GST on the subsidy payment when you receive it. So when you're coding it in your Xero account, make sure, please, that you set the GST type to no GST. Then there's a question of whether you code it as other income, whether you code it as wages, whether you take it to your balance sheet and take it back over time. Frankly, it doesn't matter too much as long as you're setting it to no GST, because come the end of year accounts, your accountant should be dealing with it to make sure that you don't pay tax on that revenue. But at the same time as not paying tax, we don't claim a tax deduction for the spending on the wages. So the 150 grand that the government pays us, we don't pay tax on. So therefore we can't claim a tax deduction for 150 grand of wages that we pay. What do I pay? Do I pay my GST and PAYE? I'm more inclined to pay your GST or PAYE than I am inclined to pay the 7th of May tax payment. The reason for that is that GST and PAYE isn't really our money. So the PAYE money is the employee's money that we're paying to the IRD on the employee's behalf. And GST money was always the IRD's. We were just holding on to it for them from our customers. So historically, and rightly so, historically the IRD have always been much more stringent on PAYE and GST than they have been on other taxes. So we would recommend that you pay GST and pay PAYE where you're able to, because we're more likely to be able to do a deal with the IRD on the on the income tax side of things.
I think I have been looking at for a few clients, if especially ones in hospitality or ones really hit by this the situation that we're in, that if it does come down to it, trying to get, we would try to contact IRD for the GST ones, just because it falls around that same period as income tax. But it is I think, like Hamish was saying, is a case by case type of thing, and you want to be a bit careful because you don't want to be stung with penalties and interest. But it comes down to having that plan again, and if you know things are getting tight, then trying to push as many payments as we can, or delay any payments, especially tax ones, out. But it's having that plan on what you should pay now, as opposed to what you can delay or try to delay through other methods.
Actually, this is a good question here that's come through. How will stock take work given we're unable to go to our business? Now, as I mentioned earlier, we've got 31 March just around the corner. 31 March rolls around on, as I look at a calendar quickly, Tuesday next week. Obviously, we're in lockdown, so you can't go to your workplaces, and please don't, to count the stock that you've got sitting on your shelves. I'm not sure if you get pulled over by a police officer and say that you're going to go and do a stock take. I don't think that will cut the mustard as being essential travel. So I would be doing that stock take as soon as possible once the lockdown is lifted. Now, your first priority when you go back to work after lockdown isn't going to be your stock take. So I wouldn't lose sleep over the fact that you're not able to do it. I would just do it as soon as possible once things turn back to normal. And it would be pretty hard for the IRD, I guess, to have a crack at you for not doing that stock take on day one. I had another one here where, and I'm going to paraphrase it because it's a little long, but it was that they were applying for a holiday on some insurance premiums because of the lockdown. So they asked their insurance company for a little bit of relief on those insurance premiums. The insurance company came back and said, no problem, but send us through your monthly stock take numbers, your monthly profit numbers, so we can get a handle on how much of an impact your business has had. Now, obviously, that's simply not practical because we don't have months and months worth of trading data, which we can give to an insurance company. So in that situation, I'd be suggesting that they, together with their accountant, prepare some forecasts. And with those forecasts, we would be able to pretty clearly demonstrate the extent to which cash flow is impacted and consequently how much support the insurance company should be giving on premium relief. Now, for everyone listening, I'm not saying that you should rush out to your insurance company and apply for months of holiday from the premiums, because I'm just not sure how much luck you're going to have. But it might be worth asking the question. But the same logic applies to conversations with the bank and with your landlords in particular, who, from what I've seen so far, have been really accommodating in most cases, where we've given the full information up front and we haven't tried to hide anything. So yeah. Another one here, shareholder has a couple of companies and doesn't draw a wage in either of them. Should they claim the shareholder wage subsidy as part-time for each of them? On that one, if you've got more than one company, I'd be reluctant to claim two part-time subsidies more than once. And the reason for that is that the part-time subsidy is $350 a week. The full-time subsidy is $585. So two part-time subsidies are more valuable than one full-time subsidy. So I'd be inclined in one of the businesses to claim the full-time and to claim nothing in the other. That said, there's no guidance on this whatsoever because everything was bought out sort of as quickly as possible. But at the end of the day, if you got audited, at least you can't be said to have overclaimed, and you basically just tried to do the right thing the whole way through it. I'm conscious of the time. We sort of want to be wrapped up shortly because everyone probably has children to stop from screaming around their entire house as they listen to this webinar. And this one's tongue in cheek, but how do I afford an accountant to help me when I've got no revenue?
If you've got a good accountant, they'll help you out through this time. Like, yeah, get in touch. It's kind of, everyone's trying to play nice, and this is our time to, really step up and help people. So if your accountant isn't able to help you, get in touch. In saying that, we are still a business as well, and other accountants out there that are doing a good job to help clients and other businesses stay afloat. They're also businesses, so it comes in swings and roundabouts, I suppose. If we can help you out now, hopefully, down the line you stick with us, or we send you an invoice later when things bounce back to pay it.
Yeah, I mean, I think the thing that we've been doing is just to help people who need help, because I don't know, I for one believe in karma. So if you pay it forward now, I think it'll come back and help us later down the track. But at the end of the day, if you really need the support and your accountant isn't willing to help you, then I'd be having a pretty robust conversation with them around it. And if that doesn't go anywhere, I don't want to sit here and volunteer to do free work for people, because I can't for a second divert all of our resources into that. But if there's a genuine case where people need help, then we can certainly help. I guess before we wrap up today, we've all kind of sat here for years and years and said, I want to have more time to work on my business, not in it. So we've got 4 weeks now where we can kind of sit here and work out what our budgets look like for the next 12 months. We can get our accounts sorted. We can really refine our business model, and then make sure our financial plan is mapped nice and tightly back to that business model, so that when lockdown is lifted and when we do get to some sort of business as usual, we're able to hit the ground running again. Because I think that the businesses that come out of the gates quickly and strongly will be the businesses that survive in the longer term. So we can sit here as business owners and go, man, this is hard, I don't know how to respond, what do we do to get through? Or you sit here and you go, I've got a team of guys around me at work who want to have a job to come back to, and they're really excited to come back to work once lockdown is lifted. So let's make sure as business owners that we're in the right headspace, I think, to lead our people, and we come out of the gate strong. Because if we come back strong, then people will follow us. And if our teams are following us, then we're going to capture more market share. We're going to get customers spending more with us. They're going to be more engaged, and then all around everything sort of works.
Yeah, and it's been quite positive. I think even the businesses that I've spoken to, in various industries, I've had a builder who's got a construction business, and he's like, no, I can take this time to really, build on my processes that I've been wanting to roll out, for hiring and hiring staff, etc. We've had a chef that hasn't cooked for herself in years, and she's had the time to just tinker in the kitchen, or she's taking on looking at her business and what's going on inside it, where she hasn't had the time to in the past. So I think like I was saying, if you take that approach and use this time to really get clear on what your plan is for your business, then hopefully you'll be able to get out the other end.
Hey, so thank you all for joining us today. We've really appreciated having all these questions coming through at us thick and fast. So if there is anything that we haven't covered today that you really wanted to ask, just feel free to drop either Rhiannon or myself an email. For more information on how to get in touch with us, check out our website, which is convexaccounting.co.nz/COVID. We've got a dedicated page there which will have a replay of this webinar up, but also a whole bunch of other resources which you can tap into to hopefully get your business through the next 4 weeks at least, but hopefully leave you in a better position to push on onwards and above from there. So yeah, feel free to get in touch, but from us, that's the end of everything today. Thanks for joining us.
Thanks. Bye.